Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show today and I'll give you some hints to guess the company which is coming at KYC. It's a mid-sized real estate player. That's the first hint coming in. Now let's make it more narrow. It is specialized in the senior living segment. That's very handful of them. You must be guessing it by now. This company is having a lot of projects in tier 2 cities, especially in Jamshedpur, Jaipur as well. And interestingly, a very huge number, 11,000 crore rupees revenue they are targeting by 2030. So we'll be understanding which this company is all about. Yes, it's a housing company and the company in focus is Ashiana Housing. Yes, that's correct. That's the company which we have got in our KYC space. And a lot of viewers have asked about this company, especially a regional player becoming a metro player as well. So that's something which is very much interesting. But the question is, why are we calling this company in KYC? There are key questions to be asked. First question is, of course, a weaker Q3 pre-sales number. Is it company specific or is it industry specific? We already saw concerns in TARC. We saw concerns in Signature Global where they reduced the guidance. And now, is it an industry-specific move? That's the first question. The second question is, industry is seeing a consolidation and this is coming in after 3 to 4 years of an up move coming in, which we saw a massive rally in the realty space. But last year, Nifty Realty Index cracked more than 10%. Also, this year itself, starting in January also, it's not looking very strong for the realty play. The launch pipeline coming back to the company for the fourth quarter. Will that moderate going ahead or will it be on a higher side? Generally, Q3 and Q4 are stronger launch pipelines reported by the real estate company. Another question is the margin pressure. The company is having a lot of legacy projects also. And at times, because of these legacy projects, the margin pressure and the pressure on the return ratios is generally seen. So will that continue going ahead or will that bottom out? That's the question we will be asking the management as well. The senior living segment, what's the guidance and outlook? The senior living segment is very much important in today's times and a very handful of companies are doing. So we'll be checking whether the demand supply imbalance might create any alpha for the company as well. And on the show, we are having Varun Gupta, who's the whole-time director of the company, who will be talking about the company's growth aspects and is there actually a slowdown happening in the industry. So that's what is concerning. But let's give you some details about the company, what it's all about. A lot of writers write to me and they say there are a lot of mid-sized companies which are not covered by the broking houses. So that's our duty at KYC to find these companies and give you the entire perspective in order to you to find some alpha in your portfolio. The company is mid-sized and it's specialized in residential projects, but these are the tier 2 cities, something which we'll be looking out for. It's a prominent player also in developing houses for senior citizens. Aryan Superstructures and Max Estates are also the peers in this segment. And it's an old company that's listed in BSE in 1993 and in NSE in 2021. So a long, you could say, a history is there. There are key metrics also when you judge a real estate company. That's on your screen. They're operating in 8 locations as of now. And totally 19,120 homes have been delivered. Now, there are a lot of business segments also. There are kid-centric homes and premium homes which they are focusing on, but the senior living homes, they have been the most bullish. So that's something which we will ask Varun about. What are the plans for the senior living home segment? Let's see the geographical presence, and I was talking about the tier 2 angle to it. And here it is, Gurugram is having roughly 32% of the revenues coming in. Of course, on the higher value side, Gurugram is expensive. We know that. Pune, that's around 15% odd. Apart from that, Bhiwandi, Chennai and Jamshedpur all make it to the list. So you can see the tier 2 cities are there. There is Jaipur, there is Pune, there is Jodhpur, there is Jamshedpur, and even Bhiwandi has made it to the list. So yes, this is the geographical presence coming in. But let's talk about the rating parameters which are there. And first of all, whenever we judge a company, we take the financials, very much important, and that's very serious whenever you're coming and doing fundamental analysis. Of course, the basic income statement, the operational parameters and balance sheet, these 3 are covered. Now we also see the cash flow and the return ratios. That's the 5th parameter we judge the company. Also the shareholding, has the institutional participation increased, decreased, what's there for the public shareholders, and the street cred, what returns have come in short term, medium term and long term as well. And last but not the least is the outlook segment. What lies ahead for the industry, for the setup as well. So totally 8 parameters are there. So the first parameter, let's talk about it. That's the income statement. And largely last 3 years CAGR we generally take. And of course, after some time, I'll be introducing you with the H1 numbers, the Q3 numbers, which was there. So it's basically 9-month FY26 numbers. But let's look at the numbers, how it's actually panned out. Revenue has gone up almost from 967 crore, but FY25, they did see some dip in it. But if you see the last 3 years average, that has been good. That's around 34 odd %. And even the PAT numbers which you saw, that's around 152 odd %. So net on the income statement, it is looking strong. So I've given a thumbs up. But apart from the income statement itself, let's move on to the other key sector. That is the operating parameters. So whenever you are judging a real estate company, you have to see a lot of operational parameters. And at times it's better to see that rather than the income statement as a whole. And when you judge this, let's see the area bookings which has happened. And that has done well. From FY22, you see that's around 15 lakh square feet that has been growing up, but kind of a consolidation coming in. And we'll ask Varun on that. The industry, is there a consolidation coming in? Same is here as well. After 3 years of strong up move, the consolidation is coming. This is the band I'm talking about. This is the value of area sold as well. Operational parameters for the third quarter. This is very much important. It's just the company has released those numbers. Area booking growth, it's down almost 18%, and the sales value itself, that's also down 12%. So that's a concern for me in my analysis. And area booked and sales value, look at that. That's also seen a degrowth in both of these parameters. So long-term basis, the CAGR numbers are very strong. But the short-term numbers, the 9-month numbers, that's where the degrowth is coming in. That means the industry is slowing down. So I would be giving this a neutral rating when it comes to the operational parameters. But let's see cash flows. Cash flows in the real estate business, always there is a lumpiness, there is a seasonality involved in it. And whenever you're judging a company like that, you should take things with a pinch of salt. I'll largely look at this operational cash flow which is coming in, and this has then H1 FY26. Remember, 9-month numbers cash flow is not shared yet. It's just an operational update. Over here, H1 FY26 is around 102 odd crore rupees. So this has been decent, but of course, it's a stark reduction as compared to the last two numbers. Net cash flows also has reduced, and it's a neutral rating coming in from my side. Now you must be wondering, balance sheet, what's the strength looking like? And whenever you judge a real estate company, you should definitely look at the working capital ratios as well, because it's a long gestation business model. There are finance costs involved as well. And largely we see the borrowings that has actually come up, but it's net still very decent compared to its equity base. So that's not a major concern. But one thing is very interesting, that's the cash balances that has actually gone up to almost 442 odd crore rupees. That means the liquidity ratios are decent. Company is not over expanding also. They are project specific, and net, this looks a good play on the balance sheet front. So this is a positive view coming in when it comes to the balance sheet. But all things are not rosy. There are a lot of issues in the financials for a real estate companies, and there are lumpiness which I pointed out. But an investor always wants is a return ratio. How are the ROE numbers? How are the ROC numbers? Are they above 15-20%? Where do I make my money? These are the questions which we get from our viewers in KYC. FY23, nothing was there, just 4 odd %. There was a bump up in FY24. But then again, it's down 3 odd %. That's where my concern comes. Another one is ROC is just a mirror flipping almost of these numbers, and that's where the concern starts coming in. So I'll give a strong thumbs down when it comes to the return ratios. Also is the shareholding pattern segment. That's also something to watch out for. And let's see how the institutional shareholding pattern has changed or not. So let's just pull up the institutional pattern of the shareholding, and we largely see that net, the FIs and DIs, they have maintained this stake. FI and DIs had 8 to 7 odd %. No major movement happening in the stock price, and that's what will come to Street Trade also to see whether any movement has happened or not. Let's look at that. This is it. These are the numbers here. Nothing much to look at. So I've given a neutral rating. Also, let's move on to the street cred. That's very much important. And if there isn't much action happening in the domestic front or the FI front when it comes to institutions, that means the stock has given largely flattish results. And yes, you're right, 1 month nothing has happened, the stock is down 3%. 6 months it's down 14%, and most of the realty stocks have taken a hit. Year to date, the start of the year is still down 1%. You can see a lot of flattish movements are happening, and 1 year it's down 16%. That means real estate, there is a kind of an industry consolidation. But nevertheless, if you're a long-term shareholder in this counter, congratulations to you. You have made 178% on your investments. But net still, giving balance to both of the views for my KYC show, I will be giving this a neutral rating. So we spoke about the street cred, we spoke about all the important parameters. I think 7 has been already undertaken. The last but the biggest parameter, that has to be the outlook. Now the revenue is expected to come in at 1200 crore in FY26. We will be asking the management whether this will sustain or not, because there are some issues happening in Q3, any issue in Q4, and yes, the guidance might be revised down, but all these clarities will be undertaken when we talk with the management. The margins has been subdued because of the legacy projects. There are 3 legacy projects coming in. This includes Anmol, Shubham and Malhar. These are the residential projects of the company. That's where the pressure is, but the main target is the 15% ROE. That is what the company is looking at, but it's from FY26 onwards. So that's a very big call, to be honest, a tough call. Since we discussed the return ratios, they were very depressed. Also, they're estimating that the current pipeline will deliver 11,000 crore rupees in FY30. That's a big number to catch on, and if that happens, then the stock surely will be re-rated. But net, it's tough call to ask, but the industry is having problems, and that's what I had mentioned to you earlier as well. Larger players have started, reducing their pre-sales guidance also. Is it NCR specific? Is it India specific? That's something which time will tell. But overall, let's give in the ratings for Ashiana Housing, mid-sized player in the industry. Income statement, it has been good. Operational parameters, they have been decent, but the Q3 update is not convincing enough. Maybe this is an industry impact that we'll have a look at. Balance sheet is strong, cash levels are at the higher levels. And if you look at the cash flow, there are some concerns. Return ratio, single digit, nothing much there for an investor. Shareholding, no much major movement happening between FIs, DIs or public. It's rather even Stevens is something what I call. Street cred, the company needs to prove something in the last 1 odd year. Maybe it's the industry specific moves. That's why it is kind of depressed when it comes to the stock returns. Outlook is strong, especially in the senior living segment. That is where everybody is focusing on. There are 2 more companies like Aryan Superstructures and Max Estates also. But the KYC rating I have given on the higher side, especially on the future and the muted stock performance till now, where there might be alpha going ahead. So I have given it 4.5 out of 8. So this is the KYC rating coming in for Ashiana Housing. But let's move on and see the management cred, who will be talking to us. So Varun Gupta would be there. He's associated with the company for the last 16 years. An interesting education from Stern School of Business, New York. And that's Varun Gupta for you. And I spoke to him, and he's the whole-time director at Ashiana Housing earlier today to discuss the sluggish pre-sales and their growth outlook, especially in Q3. So listen into that conversation.
We are confident about getting the 2,000 crore target. That was expected to be driven by a project launch in Gurgaon, which is happening in the 4th quarter of this year. The EOI activities did start in December already, and we should launch for bookings in first week of February. So I'm pretty confident that we'll hit the 2,000 crore numbers. It will also depend on how the next 3-4 weeks pan out substantially.
Well, the second question, Varun, is largely on the industry. Now the fields have started coming in that there might be lower launches in FY26 towards the end. What are the launches expected in Q4 for your company? And what are the factors actually hindering the growth for the industry as a whole as well?
So 2 things. I think for the industry has grown very quickly over the last 4-5 years. And I think maintaining that growth for a very long-term period, I think becomes a little bit of challenge. I think the last 4 years, particularly for the industry, has been very, very good. Like for us, we have gone more than 3 times, closer to 4 times in terms of our pre-sales value in a 4-year period. And for us, Q4, we have only one project launched planned new project, which is Ashana Aroham in Gurgaon, and we have a few new phases launch planned as well. So that should uh, add to the sales momentum for us. We were planning a Q4 heavy year anyways at the beginning.
All right, so of course the Q4 would be heavy for the company. That's the view coming in from Varun. But the collections trajectory on year-on-year basis, yes, they have improved on the Q3 numbers. But how the collections trajectory looking like, for the next 2 to 3 quarters?
Collection trajectory looks to be on path. We are generating about pre-tax operating cash flows of about 100 crores a quarter, a little bit more sometimes. I think that momentum will be maintained, and we'll continue to generate healthy cash flows and collections going forward.
Interesting. But Varun, to put in perspective, what are the pricing growth, the unsold inventory levels, and the demand supply trends in your key ticket segments?
Whichever segment we are present in, I would say that the demand supply situation is well balanced. Market actually remains a tad bit undersupplied, if I were to put it in most places where we are, and that augurs well overall for the industry and continuing forward. So I think we may not see the kind of growth we have seen over the last 4 years in pre-sales, because going 3x in a 4-year time frame, as I said, a little bit more closer to 4, uh, is not something that can repeat every going forward. And I think actually the next 3-4 years will focus on stability. And as a company, we will focus and shifted focus on a segment that we call senior living, which about will make up about 25% of our pre-sales this year, and we expect that to continue to grow at a very fast clip and become a much larger part of the business. And that's where we have shifted focus to. We think that's also a far more stable business, less cyclical, less competitive, and we enjoy a pioneering sort of a strong brand presence there. So for us, the focus is going to be senior living in the near term.
All right, but to give in more perspective to our viewers, generally most of our viewers understand it's the residential part and there is a premium and the affordable segment, but very interesting, senior living segment. Just give me a detailed kind of a breakup on the key parameters, what to track for them, and will the margin profile increase for the company going ahead, because it's a very customer stickiness is very much there, and of course this is on the high ticket sizes. So give us the entire picture of the senior living segment. How big is this industry? What big pie is your company trying to get in case of a market share?
Okay. So I don't know exactly the size of the industry, Sharad. I just don't know on the top of my head. We are the largest senior living developers in the country by number of units sold till date. We should do about 500 crores of pre-sales in senior living this year. That should be about 25% of the 2000 crore number that we spoke about. Senior living has a better margin profile than premium homes, because they're specialized and therefore less competitive. And also the offerings are uniquely positioned. They target a higher end audience. We are able to do these in very different kind of locations. It requires a specialized maintenance team, a specialized sales team. I think we have that ingredient put together. It's basically homes which is catering to people who are over 55 and who are looking for a active, independent lifestyle post retirement. And so the product becomes more specialized in its design and its operations, and also the location choices that we do. So therefore, and we want to be in it because it's less competitive. It requires deep
Sure.
expertise.
And margins, however, of course, they are expected to remain subdued there because there are some legacy projects also, Anmol, Shubham, Malhar. What's your view on this? It's a short-term basis, maybe 6 months, 12 odd months, but will the margins remain subdued or it's going to be flat?
No, so margins will on a year-on-year basis. Let's say if we don't look at quarters, they are improving and they'll continue to improve. This year, margins will be better than last year's. I think next year's margin will be better than this year's. A few quarters we might have subdued margins because when the deliveries of some of these legacy projects come in, they will impact the margin negatively in that particular quarter. But for a full financial year, margin should expand.
Okay, full financial year margin should expand. The last question, Varun, you also want to expand your footprint in Bengaluru and Mumbai. What's the strategy here? What's the key rationale to enter these markets? I presume in Mumbai we have seen a couple of new entries already in luxury space like DLF.
So we want to do senior living, and Bombay is a market, Mumbai is a market we would like to do. So we are looking at Panvel, and we are catering to Mumbai senior living already through our project in Talegaon and between Pune and Bombay. So in the Mumbai market, we will look to service senior living there. It's an underserved market according to us, and we see an opportunity to do good work there.
That's pretty interesting take coming in from the management. But I'd like to point out two important things from this conversation which I had with Varun, and this is of course the senior living segment. That is a very, very high growth and a high margin segment, and remember the supply is very less in the demand. As we grow towards the older nation, we'll see some kind of pickup happening, and of course there is an interesting pickup in the disposable income as well. But let's see how the outlook has shaped up, and largely we see the revenue that's unchanged. The management has stated that's the expectations for 1200 crores in FY26. Margins, they are remaining subdued because of the legacy projects, so not much there, largely a flattish kind of sentiment, so it remains unchanged. They have reiterated their guidance for that. ROE, that's the biggest concern for that in my analysis also, and they're targeting 15% of that ROE from FY26 onwards. The timeline, that's not discussed yet, and the current pipeline, that's 11,000 crore rupees by FY30. Outlook seems cautiously optimistic to me, and let's just revise the KYC ratings which I have given for Ashiana Housing Company after we had the chat with the management. And let's just go through the important outlooks going ahead. And this first one, of course, includes the income statement. There's a decent uptick coming in, but you should be judging a real estate company by their operational metrics. That's where my concern comes on the weaker Q3 numbers, and it might be an industry-specific trend. But nevertheless, it's neutral. Balance sheet, we look at it, that is strong. The cash levels are also strong. And the overall return ratios, that is where my concern starts coming in. Shareholding, nothing much has moved, and because of that, even the stock prices haven't moved. 1 year basis, 6 months basis, it's actually on the lower side. It's down 16% in the last 1 year. So yes, we can look at the valuations. They are a bit favorable, but will the company be a bit different than the others? That is what we'll be looking out for, and that's why we get these companies in our KYC show to give you an entire full picture, as most of the analyst community doesn't track this counter. Net, the KYC rating I have given is 4.5 out of 8, and overall we see that's the entire setup coming in for this company. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit.